In today's show, was the Bitcoin price rally of 2017 caused by a single whale? New research from Bloomberg shows a lone whale was behind the Bitcoin manipulation in 2017. And here's the link to the Bloomberg article. We'll be discussing this in today's show. Also, Stellar, which just had an epic 15% rally. Has XLM followed Ripple XRP with massive crypto supply manipulation? We'll be taking a look. As you can see, they just burned 55 billion Stellar Lumens. We'll be taking a look at what Josh Rager has to share, saying XLM just burned half their total supply. The current circulating supply didn't decrease from my knowledge. Therefore, I don't see the rush to buy, though it will pump hard. There are still 50 billion tokens. People act like it's a scarce asset. We'll be discussing all this plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every day. Be sure to smash that subscribe button and click the bell icon to receive notifications of the latest premium crypto news. And to celebrate the launch of our podcast, our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world, is giving away $25 worth of CMDX tokens absolutely free. For full details, click that link right below this video in the description. Welcome back to another episode of Crypto News Alerts. I'm your host, JV. Let's dive right in. Was the 2017 cryptocurrency rally caused by one single entity? Let's check it out. University of Texas professor John Griffin and Ohio State University's Amin shared their updated research paper with Bloomberg, where they doubled down on the past claims that Tether, the biggest stablecoin issuer, was the sole reason the Bitcoin price surged to its insurmountable all-time high of $20,000 at the end of 2017. Now, the academics claim that a single Bitfinex whale was actually responsible for fueling Bitcoin's rocket to the moon. Here's what they had to say. Our results suggest instead of thousands of investors moving the price of Bitcoin, it's just one large one. Griffin took a skeptical look at the cryptomania that took over the world and analyzed approximately 2 terabytes of trading data in order to get to the core of Bitcoin's success. He eventually found out that the price of the top crypto was propelled by Tether purchases. Here's what he went on to say. Tether seems to be used both to stabilize and manipulate Bitcoin prices. Griffin and Shams wrote in their controversial paper that took the crypto industry by storm in June of 2018. Tether and its affiliate exchange Bitfinex were slapped with a class action lawsuit in October 2019 over market manipulations that allegedly led to the $1.4 trillion in damages. Tether called the lawsuit meritless while criticizing the study it's based on. This time around, the stablecoin issuer states that the update of the foundationally flawed paper was published in order to give more ground to the parasitic lawsuit. Tether is not a lone critic. Some cryptocurrency influencers were also up in arms, debunking the study on Twitter. Block Tower Capital CIO Ari Paul says that the academics behind the paper in question fail to understand how financial assets work. The fact that Bitcoin or gold is managed by one custodian doesn't mean that one person is actually responsible for trading it. Taking a look at this tweet from Bloomberg Crypto, a lone whale was behind the Bitcoin manipulation in 2017, and they link to the article along with the graph, as you can see right here on the screen. Then Ari Paul responded with, Their research is based on an elementary misunderstanding of how financial assets work. It's like saying that gold is traded mostly by one person because it has a single custodian and a single point of creations and redemptions. VanEck digital asset strategist Gaber Gerbach says that the research was conducted by career academics who have no idea how the Bitcoin market works. Tether issued more USDT because there was simply significantly more demand. Here's what he had to share on Twitter. I continue to be disappointed by career academics that fail to understand Bitcoin crypto market structure basics as well as the fundamentals of cause and effect. The rise of Tether is a result of organic Bitcoin and crypto demand in periods of hypergrowth. Then crypto analyst Rhythm responded saying 6 years later and a $9,000 price increase later, they're still playing the same game, linking to a Bloomberg article entitled "The SEC Shows Why Bitcoin is Doomed." Then Andrew Sopchak responded, what's their alternative? Show their own gravestone? Then crypto analyst Plan B responded to Gabor Gerbach saying, just the usual coordinated Bitcoin FUD, Bloomberg and the Wall Street Journal together, of course. Then Gabor responded, looks like it, it's getting old, I'll do something about it. Then Mark Moss replied to Gabor, and supply and demand. My dad taught me when I was a kid that something is only worth what someone else is willing to pay. And there were plenty of people lining up to pay $19,000 for Bitcoin. That's a fact. More people were lined up to buy it at an all-time high than when it was at a discount earlier this year, trading at $3,700. That's when the FOMO, fear of missing out, kicks in. Nice Carter wrote, finance academia faces the ultimate adverse selection problem. The best academics who deeply understand the market work for hedge funds where they can monetize their advantage. And in other crypto news, has Stellar Lumens followed Ripple XRP with a massive crypto supply manipulation? Well, check this out. And here's what Josh Rager, crypto analyst, had to weigh in on the situation, saying XLM just burned half their total supply. The current circulating supply didn't decrease from my knowledge. Therefore, I don't see the rush to buy it, though it will pump hard. In fact, it pumped as much as 25% when they made that announcement. He also wrote, there are still 50 billion tokens. People act like it's a scarce asset, with the laughing emoji. Let's check out some of the replies to his tweet. Glenn Harvey said, you don't think the total supply will have an effect on speculation/value? We're leaving this range and never coming back. And then Stefano wrote, it's confirmed, half percentage burned. And of course, the price should pump hard. Low supply, more value. And Josh Rager responded, 50 billion isn't low, but yes, I understand what you mean by less. But why should XLM be valued at 1 billion anyways? It's all speculative. The Satoshi Pay founder added that the current prices that equates to 3.5 billion euros at the time of the announcement. As expected, XLM prices pumped, surging 25% from an intraday low of 6.8 cents, 740 Satoshis, to 8.5 cents or 900 Satoshis. Volume surged from under 300,000 to almost 500,000, with South Korean exchanges leading in trading. The announcement was made at Stellar's inaugural conference in Mexico City, Meridian. Industry observers have already noted that circulating supply remains unchanged, so this could be another attempt to pump prices. The price pump is likely to dump later today, as total supply is not reflective of what is out in the market. The move and numbers were broken down on the official SDF announcement, which added, Stellar isn't mine, so the Lumens now in public hands are there because we've worked hard to get them over there in the last 4 years. As for the other two allocations in time, and after a lot of thought, we've come to realize that they're too large. SDF can be leaner and do the work it was created to do using fewer lumens. In total now, there's exactly 50 billion XLM in existence. Slightly fewer than 30 billion of those are still administrated by SDF, while the remaining 20 billion crypto tokens are circulating. The SDF assets that it does not own these tokens, but just like its big brother Ripple, it clearly has full control over them and the majority of the total supply of lumens. Could this be the Ripple effect? The timing of the coin burn is also questionable, as the Ripple swell event is about to kick off later this week. There are usually big announcements from the competing platform, and XRP price usually gets a pump too. We've seen XRP pump as much as 220% as a result of the swell conference put on by Ripple. And if you missed that in my previous episodes, I actually shared the statistics and data behind it. Will it pump again this year? It's going to be interesting to see. It has been widely reported that Ripple's been dumping tokens onto the market in recent months in moves that angered investors enough for them to petition for a hard fork. Coincidentally, XRP started the move the same time XLM did, just after the announcement a few hours ago. XRP prices climbed 4.5% on the day, topping out at 30 cents. There is one clear way to regenerate interest in your crypto project, and that's to toast a whole bunch of tokens. Facts. What are your thoughts? Do you think there is price manipulation going on within Stellar Lumens? Let me know what you think in the comments right down below. And taking a look at the total cryptocurrency market cap, it's currently $250 billion. That's $250 billion, with $95 billion in volume in the past 24 hours, and the current Bitcoin dominance is 67.1%. And taking a look at the top cryptocurrencies, we can see Bitcoin, and most of them are in the green today, which is a good bullish sign. Bitcoin currently being traded at $9,282, up 0.33% for the day. Ethereum is up 0.94%, trading at $187. XRP up 2.22%, trading at 30 cents. BNB coin up 0.41%, trading at $20.59. EOS is up 4.12%, trading at $3.51. As you can see, XLM is in the deep forest green, up 15.95% for the day, trading at just above 8 cents. And Miss Litecoin is up 3.63% for the day, trading at $62.53. And taking a look at the top gainers for the day, we can see Stellar Lumens leading the way. According to CoinMarketCap, currently up 14.35%, trading at just under 8 cents. Komodo is up 12%, trading at 66 cents. VeChain is up 10.28%, trading at 0.004. Centrality up 9.76%, trading at just above 12 cents. And Quant is up 7.9%, trading at $6.48. And now to take a look at the biggest losers for the day, iExec RLC down 9.8%, trading at about 61 cents. Decred down 8.55%, trading at $19.32. Algorand is down 3.5%, trading at 25 cents. Augur is down 2.81%, trading at $11.62. And Eternity is down 2.7%, trading at 24 cents. And taking a look at the BitMEX margins, we can see the bulls are currently in control with about 8 million in superiority, but it's almost a split down the middle. Barely leading the way. We got longs leading with 50.13% versus 49.87% shorts. Are you bullish or bearish on Bitcoin right now? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in. Don't forget to smash that subscribe button and click the bell icon to receive notifications of the latest premium crypto news. And before I go, I want to give a special thanks to our sponsor, CMDX, the fastest growing health rewards cryptocurrency in the world. To celebrate the launch of our podcast, they're giving away $25 worth of CMDX tokens absolutely free. For full details, click the link right below this video in the description. It's going to take you to this page. Simply enter your email, then click the orange button that says, yes, I want $25 in free CMDX, and we'll make sure you get taken care of. As always, I appreciate you tuning in, and I look forward to seeing you on tomorrow's episode. Peace.